Okay, so I just want to go over the trade I took today and how I kind of managed this trade across my three evaluation accounts. Um, we'll hide that for right now. That's another setup that could have been taken based on another model I trade, but my normal model here, right? Obviously, we're in a deep premium. We're obviously bullish. It's hard to short at this level until like we take a reasonable, like if we take this high here, then I could see, okay, maybe we can find a tiny short. Obviously I'd still only look for like low hanging fruit, but we need to take a key level for me to even think about shorts. So it's all longs at this point. We tapped into a 4 hour fair value gap. Even if you were generous and called this the newest 4 hour leg, we were still in a deep premium. We did not fully retrace 50%. If you wanted to be a little bit more or a little bit less generous, I mean, this is really the leg here from this swing low that swept liquidity to this high. So obviously uh, nowhere near rebalanced, right? We're in a deep premium. So because we're in a deep premium, I was risk off. I risked half of what I would normally risk. So 0.5% instead of a full percent of each account. Um, so again, using a 4 hour fair value gap, obvious liquidity to come for was again this high is a magnet right now. That being said, I did not aim for that. I aimed for this high here, the last high that was formed on the 1 hour / 4 hour, I guess you can consider. And on top of us being inside of a 4 hour fair value gap, we're also inside of a 1 hour fair value gap. Sweeping some liquidity here. Obviously, you can see that. If you go to the 15-minute, right, the sweep is a little bit more obvious. The London low here, Asia low, both being swept. Um, there was a tiny 15-minute bearish fair value gap here that could have acted as resistance, but we had already tapped into it with this candle here, and then we got our inversion after the fact. So made it a little less of a issue for me to enter longs with that being there. Now, it took a while for the 5-minute inversion to happen, but it did. It happened right here. This was the highest time frame bearish fair value gap in the leg that needed to be inversed. So we had to wait. We inversed it there. Now, um, this trade ended up being a break-even trade on 2 of the 3 evals. Okay, the third eval, I decided I was going to hold on to it, be a little bit more aggressive because that eval is deep in the drawdown. The other 2 are in profit, so I wanted to be a little bit more conservative with them. I don't know. Obviously, in hindsight, you're like, oh, I should have just held and not broken even on 2 of them. But at the end of the day, here's the deal. Okay, I broke even after we took this high on 2 of the accounts. Once we took that high, I broke even. And obviously, you could see we literally rated my stop loss at break even and launched higher from there. On the other account that I won the trade on and I was being more aggressive with, I broke even at this high. So obviously we did not get stopped out, break even there. It went rallied to our TP after the fact. Here is the confirmation. So total P&L, right? That's 0.5% risk at a 1-to-1 on a $50,000 account. And then the other 2 accounts, like I said, 0, I broke even. -4 on the other one. But break even trades. So yeah, those were the that was the setup. Another setup I'll just mention really quickly um, is, let me put that on the chart here. So this is another model I've been just working on. I created an indicator for it, and essentially it's using the 33 EMA, I believe the 50 EMA, and then the 200 EMA. Let me just make sure that's right. 33, 50, and 200. Yep. And essentially what I'm looking for is a nice rally away from the 50 and the 33 EMA. Then we come back and bounce from there, leaving a 1 minute fair value gap that we can inverse, and then targeting like a 1-to-1 or a little bit less than a 1-to-1 low underneath. So it's a scalping model, and this one did a nice job of alerting me. And we inversed with this candle. I would have broke even at this high, but as you can see, we would have hit take profit for 1-to-1. So another solid setup using a different model of mine. But yes, this was the bigger move, and then this was the scalp.